Well, hello and happy July 25th. Welcome to the weekend update with your host here, Student Alpha. I want to thank you for taking the time to watch my weekend updates. If it's your first time here, welcome. Listen, these are the views of myself as a research analyst for the stock market. These are levels that I'm looking at and trading. It is important that you understand this is for entertainment and educational purposes only. Trading has risk, and I'd ask that you do your own due diligence before making any of these trades. You will notice in the report, if you've been following me, that I've started to remove some. I've set alerts. We'll bring them back when the alerts hit, but rather than sound like a broken record on a lot of them, I'm just going to let the alerts hit for lower or higher levels that we're looking for, bring them back into the report, and I will subsequently add a few. So look for those this week. And when you watch this report, if you look at the description below, if there's something specific you're looking for, it's in the description so you don't have to watch the whole video. Let's start out by talking about what happened this past week. Semiconductor AI sell-off was triggered mainly by Moonshot AI's Kimi K3 release. Um, the Chinese low-cost startup with high capability open weight model released June 16th or 17th, which revived that DeepSeek style concerns in advanced AI that it takes less computational power than assumed to run a solid AI. This weighed heavily on chip stocks, and the Philadelphia Semiconductor Index fell sharply, entering or nearing a bear market territory from recent highs and dragged broader tech and the Nasdaq lower. And we'll see that in the charts. Um, Escalating tensions in U.S. and Iran. Trump has clearly stated that the ceasefire is over, and every American that is killed, we're gonna bomb and all this stuff. And now he's threatening to bomb infrastructure for every ship that's attacked. So basically, it's escalation. Alphabet, which is Google, and Tesla earnings reactions were this past week. Both reported better than expected revenue in some areas, but highlighted that heavy AI related spending increase. And then the shares sold off notably after. Tesla dropped pretty sharply, and Alphabet had a gap down. We're going to look at Google on our charts. Amplifying concerns of AI monetization versus rising cost and weighing on broader markets for later in the week. Rising bond yields also, guys, and inflation rate fears. Oil spikes and geopolitical uncertainty helped push U.S. Treasury yields higher. The 10 and 30 year reaching multi-month or longer highs in some reports. This reinforces expectations of a potentially more hawkish Fed path forward and pressured growth, and which pressured growth stocks. This coming week, guys, the big catalyst is going to be the FOMC meeting on and rate decision. And what is that? Wednesday this coming week, around 2 p.m. Eastern Standard Time, and the press conference afterwards. The consensus is leaning that they're going to hold rates steady around the 3.5 to 3.75 range, but rising oil prices, inflation concerns have increased some odds of a future hike. The statement, any updated projections, and Chair Warsh's comments afterwards will move the markets. All right. So, mega cap earnings this coming week, we have Microsoft, Meta, Apple, Amazon, and others. We'll see how they do because remember, those mega caps control around 6 to 8% of the S&P. And then also key economic data releases we have the Schiller Home Index, we have the and within potential PCE inflation data later. And again, since February 27th, the broken record, ongoing increased tensions in Iran. If we go boots on the ground, I think it's going to be negative for the stock market. We're starting to see it in the charts. And of course, we hope and pray that we don't ever hear the word nuclear, but if it happens, you're going to see a massive, massive sell-off in everything. So, without further ado, let's get into those charts. All right, let's start with the indices. The Nasdaq, as you can see, we predicted the 30 to 31,000 high in May back when it was over in this area, which has held true. And guys, not only do we dance around the all-time high, but this past week we sold off. We did have a spike on Tuesday, but we told everybody to fade that move. That would not hold. Matter of fact, I said the upper limit was the all-time high, and I said it on this report. One thing about this report that I do every week, as I make these statements, you can go back and look at my other videos to see if I'm correct or not. This is a major sell-off here, guys, with supportive volume. We are at this, we just broke and closed below this key market structure zone after breaking below the all-time high anchored VWAP. Again, I have a downward target, guys, of around 26,000 right here, where there's a lot of market structure support. If we bring in volume at price, you'll see that the point of control is even lower. But you see how strong this cluster of buying. So this is how much volume was at that price, and there's a lot. So and there's a huge gap. Indices do not like gaps, so I expect the fall through this to be relatively rapid, and will probably expedite with a negative catalyst coming out of the Middle East. So protect yourself. Um, One of the things that we've called is buying SQQ, which is now in the money. Remember how I said we were outside the money and I'll be adding more? We add more on this break. So I'll be adding more this coming week. I did get the close I was looking for, so I'm going to add on any slight drop back to my near entry to leverage in more and shorting. So you go long S triple Q to short the markets, right? Pretty ingenious. I do want to bring in the fact that the oscillators, look at the NAMO. That is the New York or the Nasdaq McClellan Oscillator that correlates with this drop. So the oscillator itself is not oversold yet. It's oversold conditions below 60. So we do have, and then the MACD, which is the moving average convergence and divergence indicator down here, is not quite, I mean, it is selling strongly. We do have some more room to the downside. And it will be interesting to see if those, that drop matches to this level. My guess, after watching it, probably won't. More than likely, what will happen is that indicator will become oversold. You'll get buyback. It'll go back more neutral and then down. Outside of, like I said, a catastrophic catalyst, that's more than likely what the movement's going to look like. And it may be more jagged than that. But those oscillators, guys, are very reliable. In other words, when they get over 60 and they can go lower, you can see within the last 2 years, it's been 70. It's very predictable for a bounce back at mean reversion or key levels. So we do have a little bit of downside there. So I'll be on top of it. If you're in one of my groups, I love to trade these oscillators in confluence with a key level to actually buy against a drop for just a very short-term trade. The S&P, well, while we're on the oscillators, guys, let's look at the New York McClellan Oscillator. So the New York Stock Exchange in general is only at negative 24. We have a lot of downside here. You can see this was the tariff drop over here, I believe. Yes. Nope. That would have been an extra year. So this was the drop in March. And then look how strong the rebound was. Of course, it wasn't in a straight line, but went from very oversold to very overbought. So we have more room to the downside overall in the New York Stock Exchange. The VIX is at 18, which is still buying. Not a lot of protection in the markets right now. So perhaps and the moving average convergence divergence is basically neutral. So people could get caught off sides here, folks. People can get caught off sides. There's not much fear in the market. Let's look at the S&P 500. What an ugly chart since we've been monitoring it, but more recently over the last month to 6 weeks. But 2-day close below the all-time high. My target price isn't changing. It's 7,300, and that's going to happen soon. And actually, this is the VWAP from the run has now risen above this market structure. So we have to expand this slightly to include that. But we are heading into that zone. I see no reason why we will not. But we'll head into that zone for a test and maybe even further down afterwards. But as predicted, I believe we see 7,300 in the S&P 500. And negative catalyst this week will get us there very easily. We're only 100 and some points away from that. But remember, guys, when we were up here, I was still predicting this price. If this doesn't hold, then we'll see 71 and 50. But remember, when the NAS hits 26,000, I predict that the S&P will be at 7,000. The Russell 2000 has had closed every day this week, except one below the all-time high anchored VWAP. Many short-term targets about 2850. And then when the NAS hits 26,000, S&P 500 hits 7,000. We're going to see the Russ down around 2,700 approximately. So that is all the market structure confluence together where the indices will move together. Bitcoin, stay out of it. Ethereum, wait for those lower levels to buy in. I'm going to buy somewhere between 1,000 and 1,400. Cycle low should be down there close to 1,000, where I'll buy a bunch and I'll keep you guys up to date. WTI. Wow, how many of you have reached out to me and just so excited about this trade plan? You guys did great buying off this support zone. A lot of you guys took profit at the all-time high anchor VWAP, which was the previous trade that I had called. In other words, it looked like this. Great trade. And then afterwards, I said that if you weren't in that trade, watch my last video, guys, that you could participate after you get a close above this. We got that close above, and you can buy that to 100, which is fully on like Donkey Kong, if you know the saying. So uh, I see no reason why you can't hold this to $100. Any opportunity you get back this all-time high anchored VWAP with potential peace talks that probably won't happen. It's a buy in around $84, give or take a dollar. Mind your own risk. But when this gets up to 100, it will get to $100. But remember, Trump capitulates when it gets to $100 because he doesn't want it to go over $100. But again, word nuclear or severe escalations, we could break this zone. So congratulations on that. Your next entry would be in around $84 for a buy. Run it to $100 and mind your risk. Google, do you remember when price was up here? I said I'm interested in this area of interest. Look, the gap down after the earnings report smacked almost right in that area of interest. So right now on everything, because we're predicting that indices are probably more likely to fall than rise, that you need to be disciplined and wait for discounts on everything I'm showing you. Right? Discount range is 300 to 315. Keep an eye on it. We're getting in there. And right, this would not be a full allocation. This would be a start to size in. BBAI is almost to our area of interest. It is just a slow sell off in this stock. Again, 250 to $2 on this buy, then you could have a stop loss commensurate with what your risk is. Do your own due diligence. I think this is probably going to be a winner in the AI space eventually. So these are severe discount levels. QBTS, area of interest hasn't been tapped yet, but it's that 13 or 14 to $15 range. But again, everything sells off. When we're at or near these ranges, guys, and they're a range or an area of interest, when you get this much pressure downwards on the overall markets, then you try to buy towards the bottom of that range and not the top. IonQ is sitting right on the IPO anchored VWAP, but this isn't a very healthy close. We're probably going to get a cross recross, and that's what you'd want for your signal. Down and back up. We do have market structure support closer to 26, but right now this is not a buy. This is in the area of interest around the IPO anchored VWAP. That is the white line on my chart. It is a wait, right? So you have buy, you have sell, you have wait. Okay. QUBT, same thing. Let's wait for this alert, this market structure support between $5 and $7 here, or even slightly lower, $4 to $6. Let it come to us. QUBT is a wait. Quadruple U has just been selling off in the nuclear space, which is quite puzzling to me, but we're going to let price come to market structure, which is down here. The next area of interest for support is kind of that $8.50 to $9.50 range. I do have an alert set at 10 for when it taps that whole number, and we will reanalyze it. But for now, wait to enter quadruple U. Oklo, same thing. I identified last week these two gaps, which should provide support, is running right between them. Lower support is about 32 to 34. It is also a wait. Oklo is a wait. Again, all these are doing this because there's pressure on the indices in which they sit as well. So you have indice pressure, sector pressure, individual stock pressure up and down. Making its debut on the chart in the energy field, like the others, is Bloom Energy. If you like this, this was a money chart since it took off, meaning higher highs and higher lows. And then we had the peak of around $352. And now we're selling down to about 50%. How do I know that? Well, if you do the math, you can see that. If you run a Fibonacci, you can see we're at about half the move. If we bring in volume at price, this becomes very interesting. Look at this, guys. Oops, wrong indicator. Meant to grab the volume at price. There we go. Back it out a little bit, let it calculate. You see this cluster of pricing. So we have a gap support at about 176, but lower about 140 to 150. Keep an eye on this, guys. This might be an opportunity to buy a former money chart at a great discount. So all I'm doing is alerting you to it. I'm not calling it a buy or sell here. We are looking, I want to see signs of support at 175 or 150. We'll make a decision on entering this trade because it's been a good company over the last couple of years. BE, Bloom Energy. Iron right now is also a weight. Let me remove volume at price. You can see it tap these critical anchored VWAPs and this market structure and bounce, but with downward market pressure, I think we see another test. So if you want to size in that, 32 zone or range, price in around that, you can, and then have a disciplined stop loss just below it, whatever you're comfortable with, right? Tight risk management, not full allocation. Again, overall, we have downward pressures on the market, which is good. We're going to be able to grab some great companies uh, at super discount pricing. Gold. Let's talk gold, guys. Right. Death cross on gold. 4,000 support has been tested multiple times. One thing that I like that I see, even though in my last report I said it's weakening, which I do believe that, but there was a lot of strength in this move off of this last 4,000 test this past week. And I said for my short-term traders that we could buy that and do 100 points, and it paid as much as 200 points, right? Um, so what happens is you can see it taps into the area, big bounce, taps into the area, smaller bounce, taps into the area, smaller bounce. So we're going to see a small bounce, and then if it doesn't hold, we're going to see this, right? So what happens here, folks, when you see this at identified levels, that means the strength of buyers are getting weaker. And another way to say that is less buyers exist. Not that they're becoming weaker, but less buyers exist. Does that make sense? So a lot of fundamental experts have, like Mayor Volinsky has this down around 3,300 to 3,500. We see that in the chart in a consolidation. So any trades in around 4,000 should be short-term trades with quick profits. 50 to 100 points, or try to foster them to break even to see if it runs back up. But the upper limit of this trade, short term, is 4,400. We are in the death cross on this. As this price drops, it will not be a falling knife. It will stair step its way down. We will talk about massive buys in this zone when it occurs. So stay tuned. Keep like, subscribing, following, and share this to people who would find this useful. I will say that I've pulled the miners off of the report, the gold miners. Gold miners, just keep an eye on 4,000 and how it reacts, because once gold drops down to this level, that's going to be the time to buy miners. So just keep an eye on, because miners are running sideways just like gold is, so no sense even talking about them. Silver, just like the 4,000 buy zone, I have a buy zone in gold. I have a buy zone right here around 54 to 56. We're seeing the exact same reaction. We're seeing a test, a bounce, a test, a bounce, and now it's getting slightly weaker, but that still is a buy zone for short-term trading. If that gives way, we're going to see probably 45 to 49. Oops. Let's move this up so you guys can see it. We're going to see right down here, 45 to 49 if that buy zone collapses. So keep an eye on that. Short-term trading here, longer-term buys at lower levels. Platinum is just running sideways. I do have an alert set at 1500 where I'm interested in seeing how it reacts for a solid bounce of a 100-point trade. But again, same thing. The maximum upside is about 1950 on this, but I don't believe it does it. Eventually, it will break this 1500 level and will go lower. But that doesn't mean that there's not short term day trades or short-term swing trades at that level. And you have your risk commensurate with that in case it does sell through the level. Copper. Guys, copper has been performing well off of every buy zone I've given it. Right now, it's dancing and closing right around the all-time high anchored VWAP at 625. If you want a discount, probably around 610 to 620. But right now, copper is looking good with the thesis on AI data centers using it extensively. Most analysts have this as a price target to $10 to $12. Getting into the report where I've introduced some other trades to you. This is land based on building. You can see we've just weaved in around the area of interest and we're back at the price we called to buy between, 84, 86, somewhere in here. And so it's an opportunity if you didn't get into it to do your own due diligence, your own research and see if this is something of interest because when you hold it, you make 50 cents per share dividend. And we have about a 50% increase to my future price target to the all-time high if it runs there. And this is if you believe the housing sector continues to do well. This trade or this play should do well as also. Remember, we don't mind if it runs sideways on long-term money because it pays us the dividend, but we'd also like to gain the appreciation of a technical increase in price. KHC has just been a winner since I called it for you here. Called to buy in around $22 to $24. It is up. It's at 25, hit as high as 27. Um, oops. Right now, we're about to have a golden cross. So if the price lifts, I really see this thing coming up to the $36 to $38 range. This is Kraft Heinz Company, and it does pay a dividend of 40 cents. So you can now, if you're in this, you can reduce your stop loss to 22. I wouldn't quite go break even yet, but this is the all-time low down here. And I have a lot of protection. This is the way I'm trading it right now. I'm risking about $4 per share on this right now because I'm hiding behind that all-time low. There's a lot of market structure protection with that, and I'm targeting the $38 range where I'll decide at that time if I'm going to take the realized or unrealized profits as well as the dividend, or just let it sit there and continue to accrue the dividend. And once I make that decision, I'll keep you posted. Wrap has sold off about down to the 382 here on a percentage. If you remember, I alerted you to it. Buy zone in around $2, stop loss in around $1. They did have a positive thing that the Bolo Wrap, one of their technologies, is not considered a firearm, which will help them. But I want you to notice this sell-off has no volume in it. So this play is giving you nothing more than a discount. I think longer term, they have a lot of technologies that will do well, and they're using it in other countries. Do your own due diligence, but this is still a fundamental discount buy using technicals and a technical stop loss. So if you're planning on trading this, let me know down in the comments. How are you doing with it? Also, I opened the report talking about how semis and AI getting beat up a little bit. But a play, if you think that the future growth of it is very good, is this ETF DRAM, where DRAM includes where you can own companies like SK, Samsung, Micron, SanDisk, Western Digital, Seagate, U.S. Treasury bills, right? This is a managed fund. One of the experts that I know quite well has said this is a add to your portfolio. And guys, he knows long-term portfolios. As it drops below 50, we hit it. It dropped down to 48, went right up to the IPO anchor VWAP and has sold back down. So I wouldn't fully allocate here, but you're going to have an opportunity sub $50 to add this to your portfolio because when the semis come back, semiconductors and all those companies come back, it's going to run again. So don't miss the discount in DRAM and do your own due diligence. If you like those companies that this ETF manages, then we're at or near discount pricing. One thing I want to talk about in closing, guys, is I want to bring back our friend SPX. And I want to take this moment that if I had $1 for every person that asked me, should I buy SpaceX? And I told no, I would be retired. I Do you remember the chart that I used to predict what this would look like? Right. So if we go back here, there you go. Remember right before it IPO'd, I showed everybody this chart, Newsmax, to the moon and then fall below IPO price. Hmm. Well, how was my prediction? How was my prediction? To the moon and fall below IPO price. Listen, I'm not always correct, but I'm pretty damn accurate. And I'm pretty proud to say that I saved a lot of people from losing a lot of money in this scam perpetrated into the retail investor world. It's gonna head lower. So let me know in the comments, did you stay out of SpaceX because of my advice, because of one of my videos or one of my reels? Let me know in the comments below. And if you find this information valuable, could you please like, subscribe, follow, and more importantly, share it to somebody that would benefit from this? Thanks a lot, guys. I'll see you in one of my groups this week, and good luck trading.